All right, so I think we're live now. And I mean, everyone, thank you so much for joining. And I wanted to welcome you all, everybody who's in Zoom and everybody who's watching us on YouTube, that we're on live with our regular VC pitching sessions by InnMind. And today we're focusing on DeFi and infrastructure deal flow of startups. So as always, I wanted to give a word to our investors first, so you can tell a bit more about your investment thesis and your investment focus, so startups can also get more familiar with what you're looking at. So please, Nathan, I wanted to give a word to you just super briefly. And Nathan Stern, he's the co-founder of Grizzly Capital. So Nathan, can you just, in a couple of words, elaborate on your investment thesis?
Sure, yeah. So this has a bit changed in the past, like in a few months, because, you know, the market is not as bright and shiny as it used to be. But right now, our thesis is mostly DeFi infrastructure and privacy, which is perfect for the session. So that's what we focus at mostly. And then also my background is mostly from tech. And this is why, for me, it's also a bit easier to understand the technical side of those products. And so for me, it's always, I like to learn during my research, and I like to learn about new technologies and whatever things out there. So yes, this is currently our main thesis. Our tickets has been a bit reduced over the time, but we're still active and we're still looking for great projects out there.
Perfect, amazing, Nathan. Thank you so much. Yeah, definitely. This is a great place for you to be today. So hopefully you will find your next unicorns here. And the next one, Ivan Simonov, the managing partner at Cryptomeria Capital. Ivan is always our beloved guest, so please can you elaborate a bit more?
Hi guys, thank you very much. My name is Ivan. I'm from Cryptomeria Capital. We're a venture capital and venture builder firm operating since 2017, have about 30 people staff divided into two main areas. One is the investment fund, is investing with a quite broad scope. And another one is the incubation platform in which we incubate several projects under, let's say, one umbrella, sharing people and expertise. Thank you.
Perfect, Ivan. Thank you so much. And Stan Stolberg, the co-founder of Scaleswap. Stan, can you please tell us a little bit more about what you're looking at?
Yes, thanks, Kate. Always pleasure to be here. I think I was the first one who joined this pitching session, and it's nice how it's evolving. Scaleswap is focusing on every good project, but the best one, as we know, are from the infrastructure, and therefore it's so cool to be, especially in this section. The market is down, right? But this is a very great time also to clear this market and to find the best projects next Solanas, next near protocols. It's the right time. Therefore, really looking forward to startups. Besides of the IDO, which is pretty dead for some time because launching in a very bad market publicly makes not so much sense. We are focusing on ecosystem advisory and all of the services, also working together very close with InnMind. Therefore, guys, looking forward to your pitch.
Thank you so much, Stan. Yeah, perfect. Amazing. So I wanted to remind all the founders that there are more investors watching us live on YouTube, and there are going to be more follow-up, let's say, deal flow to be sent after the session. So everything will be announced and followed up. So don't worry about that. And I wanted to move on to the most interesting part of the session, so the startup pitches. And I wanted to remind all the founders that you have 5 minutes to pitch. So I will be with my timer, and unfortunately, I will have to stop you if you're going to be over time, because the rules have to be fair for everyone. So please, I wanted to give a word to Andrew Bishani, the co-founder of Emirouter, a startup from UAE. So Andrew, the floor is yours. Feel free to share the deck.
Yeah, thank you very much. Let me share the screen. All right. 1 moment, please. Can you see it?
Yes. Oh, perfect.
Yeah, great. So I can start?
Yes, please go ahead.
All right. So my name is Andrew. I'm co-founder at Emirouter, and right now we're building the protocol that will help users to conduct their cross-chain swaps in a couple of steps, but at the same time to gain extra on arbitrage fees. So what's happening right now on the DeFi market? So there are something around 5 million users who are experiencing troubles with their cross-chain swaps. So there are multiple bridges, but within those bridges, sometimes there is a lack of liquidity. And sometimes users face the trouble of gas tokens on the destination chain. So that's why they have to swap them on various dexes, then come back to the bridge, and then it goes over and over. So why don't we create a product that actually will help to solve all those problems, and at the same time will give the opportunity to for the users to gain on their cross-chain swaps. So technologically, we do it right now in the following way. So we aggregate various bridges. We've got our proprietary oracle that finds proper routes within those bridges. Then he analyzes dexes with which we are integrated and searches for arbitrary opportunities. If there is the one, he sends this data to our arbitrary bot. He conducts the swap, uses this arbitrage opportunity, and send the tokens back to the bridge. So basically, we are trying to convert $100 of the user on the source chain to $102, for example, at the destination chain. So basically, we create the value-added circle, because with the time, more and more blockchains appearing. Within those blockchains, more opportunities for users to earn, more bridges will appear, more dexes will appear. So there will be more liquidity, more routes. So that's why we integrate more and more bridges. And this integration is very useful for various decentralized applications that actually create more and more demand. And this is how we deliver our simple value proposition of fast, cheap, liquid routes for the cross-chain swaps between and inside EVM and non-EVM chains. So basically, we have a hybrid business model. We bet more on B2B because here we can have referral rebates from bridges, we can have our router fees, we can have arbitrage fees, and some extra fees from the token utility that I will speak a little bit next, right? So projected for this year, there has to be $1.5 trillion of trading volume on various dexes. So basically, this is quite a good addressable market for us. So basically, right now we have two running businesses. We have centralized exchange and decentralized exchange. These are our partners that will contribute to our first user acquisition, co-marketing activities, and so on and so forth. So this is why actually this proves that our team is capable to deliver this product. We know what is blockchain, what is blockchain security, and that is why we are launching our token that will be the source of the mean of fundraising, and also will have several features within the product that will help us to have the balance of selling and buying pressure. So for VCs here, we propose 3 rounds of private investing, right, and 1 public round. So FDV is quite small comparing to the projects in this segment, and seed investors could potentially experience 2,700% of turnovers on their investments. And release schedule is also quite balanced, right? So again, this buying and selling pressure will be profitable for us. I guess this is it. In appendix, I have additional slides, but I suppose that you will ask those questions and I will be able to show the slides about competition, our product roadmap, and etc. So I'm done. Thank you very much.
Andrew, thank you so much. Perfect timing, actually. So I guess this is time for Q&A. Ivan, Stan, Nathan, do you have any questions to Andrew?
Yeah, Andrew, I have a quick question. Well, thank you. First of all, thank you very much for the presentation. Everything looks great. You spoke quite a bit about the return potential. Could you talk a little bit about the risks that you're managing and how you're managing them?
Yeah, so I can say that we have quite low risks here, because what kind of risk could be? First, as we use third parties like bridges, right? And we know that there were a lot of examples previously of breaches, right, of the bridges. But the thing is that we are non-custodial, so we don't store users' funds. This is number one. Number two, the opportunity, not the opportunity, but the chance that the breach will be hacked right in the process of the swap of the user is quite low. So here, I guess the risks are quite moderate. In terms of our arbitrage algorithms, it works the following. We analyze liquidity pools. If we arbitrage between CEX and DEX, which is also possible within our solution, then we see that if there is no chance for us to have profits there, we just don't swap, then we don't use this opportunity and transfer users' funds right directly to the specific breach. So basically, these are all what I can say about technical risks. There are also market risks here, we all understand it, but we plan to launch it at least in 6 months and start, let me go here, and start continuous integrations with various clients and various DEXs and bridges. And when we will come up to the public round, we will have definitely product market fit, positive unit economics. So for us, it will be much easier to go to the public. So this is what I think regarding risks, right? Did I answer the question?
Sorry, and what DEXs and SEXs are you working with right now already?
So already we have integrated our own Emiswap DEX here. Right, we have a router that finds the routes between Avalanche and Polygon, so just a few tokens over there, but still we are already we can optimize those risks. Right now we have arbitrage bot that arbitrages CEX, our Emirex.com centralized exchange, Binance, and our DEX Emiswap. So it performs right now deals in average, let's say from 1 to 5% in profit, right? So, but still we have to connect all those dots together. And basically, this is why we are searching for funding, because the team is distributed between two working projects, and but we need a separate team who can be 100% full time here, because we know the problem exists. We made previous talks with our potential B2B clients. There are at least 6 segments that have quite a good demand in aggregation, and moreover we see that the next trend for DeFi and for cross-chain interoperability is integration of aggregation of bridges and simplifying of interfaces. So these are 2 main pillars with which the market will be developing in nearest years.
Perfect, great, thank you very much.
Thank you, Andrew. May I ask also a question? Was
Yes,
a great pitch, by the way. Really cool. Really, it's a needed product, I agree, but I see here Q3 about arbitrage bot, Oracle, Emirouter, Emiswap. So this part is already accomplished by your team.
Yeah,
so
yeah, exactly. This is complete thing. So for example, we can go on Emiswap and there is a breach in beta version. So we can swap one asset on, let's say, on Polygon to Avalanche, right? So we can, but in private mode, we can test arbitrage thing. Oracle right now is working. It makes accruals for our staking and farming rewards within our DEX. So basically, the parts of MVP are ready. So we have to collect it all together, right? In order we could add more bridges and more exchanges, create SDK, and then start integration with clients, because we already have inquiries for that.
Okay, right. And are you using any decentralized solution to secure this somehow? Any smart contract-based solution, or it's all centralized? The arbitrage bot is looking for the best route, for the best arbitrage, checking different prices and executing transactions?
No, there are, in terms of smart contracts, of course, we will use them definitely, because the architecture itself, I wouldn't say, yeah, it's complicated. So that's why they will be part in smart contracts, definitely. Arbitrage right now, the bot is, yes, it is centralized, but I think this is quite a good thing, because we control and we see that, all right, if someone is trying to front run us, then we won't go to this deal. So there are some peculiarities in this thing. I can give more information maybe with our technical team on some separate call. Yeah, so there will be a set of smart contracts controlling this thing.
And can you please elaborate a bit more on token utility? So what is the real, why do we really need a token here?
Yeah.
Besides a fundraising, which is clear.
Yeah, it's a good question. Thank you. So we have simply two additional utilities here. So the more you stake, the more gains from arbitrage fees you have. So this is point number one, and the number one utility, right? And the second thing is that, and by the way, this staking is also connected with NFTs. So top stakers will have special NFTs on their wallet, and this is how we will understand whether this user is eligible for more fees out there. So it's going to be something like NFT staking. This is point number one. And point number two, we have also rewards, but those rewards are accrued from the revenue of based on our turnover. So here in the tokenomics, we don't have the separate budget for staking as it is on various projects. So we are not trying to inflate our token. So the more volume we have, the more rebates we have for our users. And of course, the users will be more interested to stake our token rather than bringing it to the order book, because this is the simple utility. You stake, you gain more. Yeah, this is it. So very simple, but I think quite engaging.
Okay, and you discovered that the arbitrage possibility is still so around 2 to 5%, especially for new tokens. So you really can offer this to the user, right?
Yeah, it's also very important that there are the things that I can tell right now are just not showing all the opportunities that we have. Because right now we are speaking with blockchains with which we are integrated, and they will be launching their stable coins, and within those pools we can also balance them. And there are too many opportunities out there with special arbitrage vaults, so there could be something very interesting. And again, I will repeat that of course market is always volatile, and it's not 100% guaranteed that there might be an arbitrage opportunity. So there might be or there might be not. But the thing is, let me show you once again, please, that we have referral rebates from bridges, and they are very various. So here are pessimistic numbers, because today we have spoken with the bridge, and they charge 1% on the trading volume from the swap. Right, and from this 1%, we can give 20%. So it means that it's going to be not 0.09, but 0.2%, which actually is at least, I don't know, 5x more than we see here. So we share also percentage from these rebates with users. So for example, if there is no arbitrage opportunity, then we can share this stuff with him, and his swap will be or close to zero, or maybe just a little bit covering his fees, or from 199.5. So definitely we bet on price here, right? Price, speed, and the liquidity. So this is our value proposition for users. And like when we were making researches, right, we see that there are two types of audiences. There is retail user, which has the average swap amount of something around from $1,000 to $3,000, and there are whales who at the same time swapping even $50 million in one cross-chain swap. So we are more concentrating here on retail users rather than whales, but we are bearing in mind whales, and yeah, there could be a product especially for them. So yeah.
Okay, interesting, makes sense. Let's get in touch and speak further.
Yeah, thank you very much.
May I ask one question?
Oh, sorry.
Yeah, sure.
Yeah, it's a quick one. Now, can you please make some contact, because we are in our protocol doing cross-chain liquidity swaps, and probably we're going will be in need of this bridge routings that you're doing. I think it's very innovative technology, because there's no the best bridge that can cover all of the chains and all the protocols. So it's actually pretty promising.
Yeah, sure. Would be very, very glad to discuss more in terms of product integration. And the thing is that, like, every bridge with which we speak bears in mind the idea that he would be the only one bridge.
Yeah, sure.
All those opportunities, but we understand that technologies are emerging. There are so many things that happening, and it's just impossible within the same team cover everything. So that's why, and again, the market will be growing definitely, not now, but in 12 months, in 20 months, definitely it will be growing. But aggregation is the trend right now, and the more comfortable we'll be, the more efficient our SDK APIs will be for our users, the more engaging tokenomics inside we will have, the better market position we will have. So this is our philosophy, and yeah, we'll be very glad to discuss more if our values are on the same page.
Perfect, guys. So yeah, let's maybe ask Nathan if he has the last question to ask from his side, and then we should move on to our next startup. So Nathan, do you have any questions?
Yeah, sure. So for me, it would be interesting to know why you're targeting retail users first instead of the whales, because right now is maybe not the best strategy, could be, but I would like to know your reasons why you target retail and not bigger users for now.
All right. So as long as we choose we bet more on B2B strategy, so it means that there will be lots of integrations with various dApps, right? We see that within those dApps, there are more likely to have lower check swaps, lower check holders, right, rather than bigger one. So we guess that with the market growth, which will definitely happen in a year or so, there will be too many retail people coming to the market again, because we all know that all those growths usually happen when the retail is coming, right? And for the retail, we have a very simple and clear message. So for example, you swap, you earn, right? And actually we would like to create this circle when people will be just swapping, and just gaining. So that's why I guess that in order for to grow at this specific stage, we need to concentrate on retail market. But again, I know, as far as I know, only several bridges right now in the market who actually have enough liquidity for whales. I won't name them, but I know them, and we will integrate them. So basically, in this case, working with whales or not is limited by the capacity of bridges with which we are integrated. So I guess that we cover both, but in my opinion, the growth of the brand is more likely to happen with retail market rather than with low amount of whales. It's like my vision here.
Okay, yeah, understood that. And it's also interesting that you said you swap and swap and swap and swap, and then you earn. So it's kind of like swap and earn, similar to play to earn. So yeah, that's. I also would like to have a call with you after.
Yeah, it would be nice, gentlemen. Thank you very much for your time today. And thank you for the questions. I hope that I have given the full picture and answered all of them. So yeah, thank you very much.
Yeah. Andrew, thank you so much. Great job. I mean, this is actually, guys, the purpose of the pitching sessions, where when you're not just getting the investors' attention, but also finding potential partners and collaborators of the solution. So this is great. I'm really happy about that. So yeah, Andrew, great job once again. Thank you so much. And we're moving on to our next startup, and I wanted to give a word to Greg Tominski, the CEO of MetaVoice AI from Poland. So Greg,
can you hear me?
The floor is yours. Yes, yes, perfect.
So I'll start sharing my screen.
Amazing.
Okay, and please confirm that you can see.
Yes, we can see it. Yeah.
Okay. So, my name is Greg, and I'm CEO of MetaVoice. Nice to meet you all. MetaVoice has noticed few issues. First one is that currently there are in the market no tools to create voice avatars. Just imagine that you play a game as a girl. You are a girl or a woman, but your character is a male character. So when you meet your friends, they always hear you with your female voice, and you have no tools now to change it to sound like a character you play. Another issues that are emerging nowadays and growing day by day, these are fake news and deepfakes. And those issues can be solved with the right usage of proper artificial intelligence algorithms and blockchain technologies. And what MetaVoice proposes is the application that gives you a chance to convert your voice, to swap your voice in every language in the world, giving emotions to any other voice that you buy in our platform. And when you also consider that the voice is represented as an NFT token that gives you additional uniqueness and be the only one speaking that voice in MetaVoice is in metaverse AR VR world. Take also into consideration that voice is a biometric data, and AI algorithms can recognize you by your speech and differentiate you from the other people, right? And when you use also the NFT tokens together with those algorithms, you are able to sign any audio video stream and give the others a chance to verify that this video has been recorded by you or not fake one prepared by the other ones. How MetaVoice is going to earn? First of all, on the subscription, monthly one, with the access to library of voices and voice filters, and also on minting the NFT tokens with voice models, so with the right voices, and with voice IDs, giving you the chance to sign audio video streams. And you, as an author of a voice model, you can have the passive income by reselling actually this voice model, and the MetaVoice will earn on transaction fees on reselling those voice models. Behind the project, there are 3 co-founders. It's me, Greg Tominski, with almost 20 years in IT, starting from developer through Scrum Master, PM, Program Manager, up to Department Manager, delivering projects for big brands like Fidelity, like Bayer, like Adidas, like DB Schenker, Kia Gen, working for companies like Capgemini or Intiv. Greg Shuba, the second co-founder and COO, with 15 years as a sales manager, growing the companies to revenue up to 10 millions of a year. And Mark Pawiga, with 8 years experience in marketing as a CMO, together with us, there is David Skuzok, AI technology leader, working on AI projects, bringing big projects like for BMW company. And there are 6 others also in the team. We are going to bring the ERC20 token, first deployed in the Polygon chain, then bridged to Ethereum, and then to the other forks of Ethereum. And currently on the market, there is really few, 5 competitors dealing with voice conversion or with blockchain technologies or voice modulation, but none of them has similar business idea like we have. And this makes us actually leading with this business case and business idea. And up to next year, we are going to deliver 3 desktop versions, or version for 3 desktop platforms like Windows, Linux, and Mac OS. And then the version for 2 mobiles, like this will be iOS and Android. So thank you very much for listening. And we are ready for the questions. Please visit us on our social media. Yeah.
Perfect, Greg. Yeah, thank you so much. A bit over time, you just finalized the live slide when I wanted to interrupt already, but
Okay.
perfect timing.
Sorry for that.
No worries. Yeah, so questions to Greg, Nathan, Ivan, Stan. Do you have any questions?
Yeah, I have one question. Greg, thank you for the presentation. Interesting to have AI application within blockchain infrastructure. How do you came to this idea? So what is the big vision of
this is a long story. Mark, our 3rd co-founder, he had the idea of creating the product for kids, little pillow, being able to sing or say the stories to kids, little kids, with the voice of father or mother, while they cannot be actually present at the same time. And when we were developing this idea, we came to the conclusion that actually the engine behind that is a much bigger idea than creating this little product. So the engine has much bigger potential with all the markets actually, right? And not with only the product for little kids, right? So this engine, what we are going to deliver, can be used also in such a pillow, right?
Mm-hmm. So, okay, so you want to use the voice as a biometrical marker.
Also, yeah, exactly. So we are going to use speech-to-speech algorithms. They don't work like speech-to-text, text-to-speech algorithms. I'm sure that everyone has already tried like Google apps with the Google Translate, right? Where you can actually say to Google Translate what shall be translated. Google recognizes what you say, right? You can say with any emotions, but at the end, after translation, you get the text spoken actually without emotions, right? And that kills the emotions, those algorithms used. And our competitors use mostly those speech-to-text, text-to-speech algorithms, right? We are using speech-to-speech. So it means that you can speak in every language in the world. You can scream, you can cry. Everybody will hear you crying and screaming, but with other voice. You can be now a woman, an orc, an elf, a kid, or old person, and you can connect them, and so on and so on. But this is one of the features, right? And another one is those one which you said, is that you will be able also to sign any audio video stream and give the others a chance to verify using the blockchains and NFT tokens that it was you recording this video stream and not the other ones. Yeah. Very important. This is very important in this emerging issue with deepfakes. I don't know how familiar you are with the deepfake algorithms, but we were also with my team preparing videos that CEO of our company is saying this and that to entire company, which was a fake one. Everything generated by AI algorithms.
Yeah, I know it's a big pain, and in future it will be even bigger. And I know that only this similar algorithm which creates big fakes can also validate if it's deep fake or not. It works vice versa. But how accurate this is? It's 100% accurate. That
none of the algorithms give you 100% accuracy, right? But using a voice as a biometric data and algorithms behind that will give you accuracy close to 100. And when you use it also, when you use it, for instance, to log into your banking app, or even to get to your house to open the door or open the car, for instance, it will give you more secure solution that with traditional keys and login and passwords, right? So mostly used at the moment, right? And Web 2.0 solutions, as for instance, right?
But maybe this is a very good use case for you to use the engine as for KYCs or for like thing like access. Maybe it's more, maybe you should go more into this direction rather than saying that, okay, we are solving the metaverse meta problem where someone wants to mimic the voice. It's a bit more serious,
Yeah, we have it on the list of brands and markets to be used, actually, right? And also, for instance, with the payments, voice payments, right? To authenticate you instead of using a card, for instance, right? But we focus not only, but we focus on this gaming industry at the moment, because this is very big, very big industry, and lots of actually blockchain investors. They are very strong in gaming industries, right? So this is the reason why we are attacking this one first, and then going with the next step, going to the other traditional industries that are not that yet using the blockchain technologies as they should, in my opinion, right? So first, integrate with the industries that already use the blockchain technologies, and then go to the other ones also.
Thank you. All from my side.
Thank you, Steve.
Others. Thank you.
Yeah, I see that Nathan is unmuted. Nathan, do you want to ask any questions?
Yeah, so here, like basically to repeat the question from the previous talk, why do you use a token? I see that this model could be also done by a traditional subscription model where the users would have to pay some kind of fee to be able to use it. So yeah, why do you use a token?
So the token, ERC20 token, you mean, right? First of all, will be used as a payment method in our app, right? For minting the NFTs, as well as we needed that also to raise the capital in much more better way than the traditional rising capitals ways up till now, right? But in the utility, we have also, let me also show it. We have it on the stream, sorry, on the web page. If I can share my screen again, may I?
Sure, yeah, go ahead.
So you can find it also on the page that first of all, payments of a subscription, of minting, of accessing the voice models, and so on and so on. But tokens will give you, and holders of the tokens will give you also additional features, additional filters in the app. At the end, 10% of our profits will be used to burn tokens to increase this deflationary, so to make a deflationary token faster, right? Did I answer your question or not yet?
Yeah, this would pretty much answer the question, yes. And then the next one would be, where would you see the first initial use case of MetaVoice? You were already talking about the games and this sector that you wanted to go in there, but maybe you already have some more concrete examples. You don't need to name any names, but maybe some kind of abstract way of saying this kind of game, we want to go there, and by also being a bit more precise on the actual implementation of that. So for example, people are using it, and then when they are live in a Discord and people talk, then the other people can directly hear what they are saying or something of that sort.
So except of gamers willing to use different voices like elves or orcs or any other characters, fictional characters, or a real person. So we are also working on the media industry to improve dubbing. So having the MetaVoice as a MetaVoice, you will be able to hire an actor without a need to take him to the studio, right? For instance, when you record the dubbing for a new movie, you will not have to hire the actor. You will use MetaVoice app and just buy the token with his voice. The actor will earn on it passively and will not have to come to you. And it will improve in time recording dubbings, right? For movies, for games. So this is the second usage that we are strongly working on of voice conversion. Greg Shuba, our COO, is also on the line when you want to give an answer.
Yes, thank you, Greg. This working with dubbing sector will able to reduce the cost, because, for example, the Witcher from the movie Geralt, the Witcher. So from in different countries, the dubbing is different ones. So the Geralt can have the same voice in all countries. Like, for example, in Transformers, Optimus Prime is well known by his voice, his deep voice. So imagine that in Czech Republic or in Russia and different one, there is different voice, but every single country can have the same voice and can be famous by the voice. And this is the way: reduction of costs for the dubbing industry and the easy to get this, to produce this voice, of course.
I'll give another example. In Germany, for instance, every movie is released to the market with much bigger delay like in the other countries, because every movie is being for every movie, dubbing is being recorded with the voices of local actors. So actually in Germany, no one knows the real voice of Leonardo DiCaprio, for instance, because there is a local actor saying everything in German. Leonardo DiCaprio doesn't know German language, right? But with MetaVoice, those movies, first of all, can be earlier on the market, and everyone can hear the real Leonardo DiCaprio voice, not from the actors, the local ones, right? I don't know what about the other countries, but I know about that in Germany because I lived in Germany a lot. At the moment I'm in Germany as well.
Thank you so much.
Okay, that's interesting to know, because I'm German myself, and I know that the language is always different. And I used to watch movies in English most of the time because I find the voice of the actress just better than in the German version. And so if you manage to do that the voice actually is the same but in German, that's huge. And the step which you said with the gaming and the dubbing, those are pretty good use cases. So yeah, that's interesting.
This is our goal. On our YouTube channel, you can actually hear me original video, and after the swapping and changing the voices, so you will be able to see how it's going to work, how is it actually working, right?
And the last thing is creating avatars for the metaverse. So people in the future, the nearest future, they will be creating own avatars for a metaverse. So creating how they look like, but no one take care about how they will be sound. To communicate, the people will be using a voice. So we will give a skin of voice. It will be something like that. The missing puzzle in a creation of character.
Perfect, Greg. Yeah, thank you so much for adding. And I guess you can continue in private. And I also wanted to remind all the founders just not to dig very deep in your answers during the session because we're limited in time. And keep in mind that you always have a possibility to continue during private conversations after the session and already explain everything about your product. I know every founder is super passionate about it, but just, yeah, keep in mind the format of the session. Thank you so much.
Thank you very much.
Thank you. Yeah, so moving on. So the next speaker is Alex Sipakov, the co-founder of Unofarm from Singapore. So Alex, please, the floor is yours.
Hello, guys. Nice to be here. It's a pleasure to meet a lot of interesting protocols. Maybe we'll collaborate with some of them. So guys, can you see my screen?
Yes, all good.
Okay, perfect. So Unofarm is a DeFi yield aggregator. So we're aiming to create here one Una entry pool, entry into the whole DeFi yield opportunities. A few words about our team. So me and other co-founders, we have established a blockchain development company a couple of years ago, and we were producing a lot of DeFi solutions. And we came to the idea of Una. It was our internal project for our own staking and farming needs, because we were farming doing this and was not enough nice toolings for doing this. A lot of things needed to be done manually or semi-manually. So we understood there is several real problems on the DeFi yield aggregation market that we can solve with our product. Apart from the C-level and the advisors, we do have 12 teammates fully dedicated to this project. So what kind of problems are we trying to solve here? First, and the major one, is a safety problem, because the DeFi is quite vulnerable space. So we're going to audit all of the protocols that we're going to implement in. We will implement anti-rug pool system for the pools. We'll have a fair distribution of the rewards. We'll have an insurance pool for the users, and we will have a nice idea, we'll call it inheritance mechanism, because you as a user can be another failure in the system, another point of breach. So another problem, and I know it from my own experience, entering into the DeFi is quite complicated. So we want to create a simple to use and user-friendly solution with, for instance, single asset entry into the pools, with a fiat gateway, with advanced portfolio analytics, so you will understand what is going on with your funds. And in general, want to create ready-to-use staking solution for the retail segment and for the crypto businesses as well. But the main problem that we're solving here is the problem of constantly changing APYs. So you never know whether your liquidity is locked at the best rates or not. And you need to search and monitor the market and move your liquidity from time to time. So we understood that we can automate this. So we're working on building a cross-chain liquidity management solution, which will be automatically move your liquidity to the best yield source at the moment. And we have conducted a small report with the backtest of the strategies, which we're currently developing. And it said that on average, this helped Una to outperform, the main competitors without automated strategies, at least for 50, 150, maybe 200% in some cases for some preferable pools. So what kind of features we'll have inside of our ecosystem? We'll have an aggregation of the major protocols, including concentrated liquidity protocols like Uniswap v3 or Orca. We do have an auto compounding, which is working, trying to maximize the API. It's working with the most optimal time interval with the selling of the farm tokens. We do have a personal profit analysis, insurance pool, intelligent management, this automated strategy that I've mentioned, which will be working on cross-chain fiat gateway and inheritance mechanism. So we do have an MVP. It's already live on Polygon network. You can test it and try it for yourself. Apart, like talking about token utilities, we do have plenty of it. In general, we'll have a tier system for the users. So they will have an access to all of these nice features according to the common tier. For instance, if they want to have a cross-chain liquidity swaps, they need to level up their tier by the token staking. We'll have a big governance functions of the token because the majority of the tokens, about 50%, will be in the control by the DAO. We'll have an affiliate system with the payments in token, fiat gateway, discounts and markup fees will be charged in token. We will create a white label solution on top of Una in order to increase the TVL. Plus, there will be mutual pool listings and customizable automated strategies for the users. In terms of token circulation, we'll have 4% performance fees, and they will take into for the buybacks, for the insurance pool, for the additional staking rewards, for the protocol treasury, but all of these numbers will be DAO controlled. In terms of investments, we do have 4 rounds. So now we're covering the seed round and preparing ourselves for the private one. We'll have a special round for the key opinion leaders and a tiny public round, just for the marketing purposes. We have received several grants from the chains. So we are going to integrate in from Polygon, from Aurora, from Everscale. We are part of the Polygon Village Accelerator program, or the TDFI Accelerator program, and do have various partners through the DeFi ecosystem. In terms of vesting, team and investors will have approximately the same amount, but team will be vested for 2.5 years, investors for 17 and 18 months. And as I've mentioned, the majority of tokens will be in the DAO control, including on reserves, incentivized, and other issues. So in terms of
last phrases, please, Alex.
In terms of on the roadmap, so we're working on auto strategies right now, and next we're doing audits and then start our cross-chain journey. So thank you for attention, guys.
Thank you so much, Alex. Sorry, it's always so painful to interrupt you guys.
But
sorry.
I don't know how to pitch in 5 minutes.
This is my job for today.
It's okay. It's okay.
So questions to Alex. Great job. So Ivan, Stan, Nathan, any questions?
Yeah, I have a quick question. You mentioned a lot of functionalities that you will have on your platform, but then you also mentioned that you already have an MVP.
Yeah.
Could you talk a little bit about what is the functionalities that you have already right now and what's your roadmap, let's say, for the next 12 months? And which of these features that you talked about will be, let's say, will go in the long box?
Yeah, this was my last slide. In terms of a roadmap, so now we do have an MVP. What it's doing right now, it is aggregating, it is doing a reinvest with the best, with the most optimal time intervals. It does have personal analytics. It's working live on Polygon. Now we're working on the auto strategy that I mentioned, our unique value proposition, and also the fair distribution mechanism, which will prevail, the attackers who can put their liquidity just before the reinvest will occur and take it away afterwards. So our system will calculate how much time exactly your liquidity was working, like in the middle of the reinvest. After this, we're going for the cross-chain. We do have a backlog of the chains, and we're talking of like different bridge solutions right now in order to manage all of this. Probably we're going to stick, with a couple of bridges, because as was mentioned in the first presentation here, there's no unique bridge which can cover all of the chains. So in line, we do have event compatible chains to start from. At some point, we'll go to Rust orientated networks like Solana and Near. So after this, we want to create a white label solution in B2B SDK. So we will have an ability to increase our TVL in this case. And after this, we're going for the concentrated liquidity pools, community auto strategies, the fiat gateway, and DAO construction. Next year, we do have plans to create an insurance pool. And firstly, we want to integrate some solutions like Nexus Mutual, for instance, just to have some insurance for the users. And inheritance mechanism will be at the end of this list.
Understood. Thank you very much.
Thank you, Evan.
Any other questions, Stan?
Yeah, I have one. Alex, thank you for the presentation. Can you please elaborate how do you achieve such interesting API? So what is the, maybe it's some very secret sauce, but how much you care of this?
You mean this slide? This one?
Yeah, for example, yes. This will be one of your USPs, right? That your APIs are higher than others.
Yeah, look, so this numbers over here is representing UNA outperformance. Like if we're talking, for instance, you put your liquidity in Sushi for USDC, USDT. We have taken data and calculated how much exactly you should earn, for the last 6 months, I guess. And, the majority of protocol, they say you will earn up to like 10, 20%. So exact percent for Sushi for this pair was 7.42. But what UNA is doing, it is like monitoring the market. And for instance, Sushi is the best yield source at the moment, but then it is a quick swap. So we take liquidity from Sushi and put it here, meaning that is anytime it is like trying to search the best yield source across the whole market. And that's why we're outperforming any just situation when you just put your liquidity in one of the pools, because you never know how this pool will perform in the future, right? Because the market conditions are changing, the fees are changing, the LP rewards are changing. But with automated strategies, we're always trying to catch up, the best place where your liquidity should be locked up. And this percentages is representing how much UNA is outperforming, like for instance, with on average for all of these yield sources.
Okay, it's interesting. And you are developing fully automated bot system, which is tracking all the parameters and trying to set the best solution, right?
Yeah. So we do have a backend, which is monitoring the market, taking the data, making all of the calculations. It's just too complicated to put everything on the smart contracts. They just kind of digest, this amount of calculations. But yeah, we do have a tracking system, which is like monitoring the market directly. We're using the graph protocol to take the data and several other solutions.
Okay, right. And maybe you thought about this, but what is the main token utility at your site?
Okay.
Yeah.
1 second. So in my humble opinion, there are, 3 major token utilities here. The first one for the retail segment is the tier system. So users will need to buy and stake the token in order to get access to the features which we do have inside the ecosystem. In terms of business development, the white label solution with the subscription payments in the token will generate some up pressure here. Plus, we'll have a very nice TVL, from the white labeling, and of course, it will be the governance, because as I've mentioned, around 50% of all the tokens will be in the DAO control. All the major solutions will be in the control by the DAO. How much performance fees we will be charging, which part of them will go for the insurance pool, like every major details and solutions we want to have, DAO regulated. So I guess this will be, top 3 token utilities.
Yeah, thank you, Alex. Makes sense, and yeah.
Thank you,
Stan.
Thank you. Nathan, do you have any questions? Or not for now?
For my side, no questions, no.
Okay, perfect. Nathan, thank you.
Hey guys, thank you so much.
Alex, thank you so much. Great job. Our analysts will follow up as usual, so you can continue in private. So yeah, thanks a lot for joining us. And we're moving on. So I wanted to give a word to the co-founder of IvoryPay from Nigeria, Oluvatobi Ajayi.
Hello, everyone. How you doing?
Hi, good to see you.
Yeah, let me just share my screen.
Sure.
Can everyone see my screen, please?
Yes, all good.
Okay, my name is Tobi Ajayi. I'm the co-founder and CEO of IvoryPay. I've been a marketing expert in the crypto space for about 6 to 7 years now. And one of the perks that comes with that is I get paid in cryptocurrency. But the problem I've encountered with this is the constant need to change crypto to fiat. Every time I need to pay for groceries or rent or just random monthly subscriptions, right? And to top this up, I woke up one morning to the discovery that the central bank of my country, Nigeria, has put a $100 limit on debit cards for all dollar-based transactions. And what this simply means for me is that all online payments that I can make per month can't exceed $100, right? And I realized not just the implication this will have on me was, of course, monthly expenses is over $100 if it's dollar-based transactions, but also on businesses in other countries that have a huge user base in Nigeria and what this would eventually do to their bottom line. And the question is, if only I could spend my cryptocurrency without the need to change to Naira, right? And for this to work, there has to be online businesses that are willing to accept my cryptocurrency as a means of payment. And the need to solve this problem really gave birth to IvoryPay. And IvoryPay is simply a payment gateway that allows online businesses, specifically in emerging economies, to get paid for goods, products, and services in stable cryptocurrencies, specifically USDT, USDC, and DAI for now. So think of us like the Stripe or PayPal for crypto payments. But however, we understand the peculiar challenges that surround online businesses in emerging economies, especially in a space that's getting continuously saturated. One of which is, of course, the need for them to increase revenue in the online space, but also the need to get access to loans for them to be able to scale their business, right? So for us, we don't just want these businesses to be able to accept crypto payments, but we want them to be able to thrive and also scale as well. And which is why we didn't just create a payment gateway for them to be able to receive cryptocurrency, but we decided to create an entire payment suite that allows them to set up a no-code NFT storefront where they can better monetize their businesses and monetize their products through leveraging NFT technology, and obviously an opportunity for them to also increase the revenue. But we're also looking at ways where we allow these businesses access to DeFi loans with low interest rates, which also gives them easy access to finance that they need to be able to scale their businesses as well. A problem that they currently face with traditional finance. And one of the markets that we're currently looking to operate in, of course, is Africa. But we're also looking to explore into South Asia, Latin America, and South America as well. And for just Africa alone, there are currently estimated to be 35 million cryptocurrency holders, which won't need a lot of convincing to use our products. But we also have an untapped user base of over 470 million digital payment users that currently exist in the continent, apart from the largest set of over 600 million internet users already. And our business model it's quite simple, and it's designed to create a sustainable revenue generation model. We're charging 1% transaction fee on online purchases that are made on our partner platforms. We're charging 1% withdrawal fee on crypto to fiat payouts. We're charging 1.5% transaction fee on NFT storefront. That's for all NFT sales that are being made by businesses and merchants and also creators. And we're looking to also make some money from the interest rates that's true on the DeFi loans that we offer as well. But we decided to take the solution a bit further by creating a cryptocurrency called the Ivory token. And the Ivory token is the utility token of the IvoryPay ecosystem. It was created to incentivize the partner businesses and their customers as well to be part of the ecosystem. And it has 4 major use cases. One is for discounted payments. It can be used to make payments. Users get up to 20% discounts on purchases that they make with Ivory token on partner platforms. The second use case is that it can be staked. Individuals, businesses would be able to have will have the opportunity to stake Ivory and also earn more Ivory. However, the APY also varies for individuals and businesses. Staking for businesses definitely yields more APY, which also incentivizes the businesses to want to hold the token for as long as possible and also use it to even earn more revenue for themselves instead of stacking cash up in the bank. The token will also, which is the third use case, will also give businesses access to DeFi loans. There's a minimum amount of Ivory token that businesses need to hold before they'll be eligible to request for DeFi loans as well. And the fourth utility for the token is it's going to give businesses, merchants, and creators the opportunity to mint NFTs for free on the NFT storefronts that we're allowing them to be able to leverage. So the token is designed in such a way that there's constant buy pressure and constant demand for it. Demand from users that are looking to get 20% discounts off all online purchases, which by default not only allows us to convert people that are already in the crypto ecosystem, but also even non-crypto users that are looking to explore the opportunity to get discounted purchases as well. But there's also demand from businesses, merchants, and creators that are looking to also get access to loans, also be able to get customers who will be willing to make payments on their platform for 20% discount, but also opportunities to mint NFTs and get IIPYs for themselves as well. We currently have our seed round and also the private and public sale coming up for the token. We're looking to raise $400,000 for the pre-seed round, about $1.8 million in private and about $2.4 million in public. That pretty much sums up what we are at IvoryPay and what we're looking to achieve. Thank you very much.
Thank you so much. Yeah, a bit over time, but the rest was great. Thanks for that. So questions, please. Ivan, Sten, Nathan, do you have any questions? And Oliver, Toby, by the way, if you can zoom in the presentation, because we can see like 2 slides, you know, like kind of switching in between.
Oh.
At least for the Q&A, yeah. So we can see like the big slide on the screen.
All done.
I mean, meanwhile, Ivan, Sten, Nathan, if you have any questions, yeah, feel free to start. And then meanwhile, we're putting on the deck back. All right, I think, yeah, this works.
Yeah, thank you for the presentation. So I have one question because I've didn't fully got the main product. Is it a kind of exchange what we are creating, or kind of neobank, or maybe I missed this?
Yeah, so IvoryPay, like I said, is a payments gateway that allows businesses to be able to receive payments, so get paid for the goods and products that they sell online in stable cryptocurrency. So just think of us like Stripe or PayPal, but for cryptocurrency payments.
So like Coinbase Commerce, for example.
Yes, something like that.
And do you have bank accounts which are willing to work with you? Because you need also, right, banks, or do you want to avoid fiat currency fully?
Yes, so what we're going for is the need to create more spend use cases for cryptocurrency and reduce the need for people to actually spend fiat. And of course, there are going to be payouts that are made in fiat currencies to businesses that are looking to make withdrawals, right? But the whole idea of our entire ecosystem is one, to allow these businesses to receive payments in cryptocurrency, right? And also keep that cryptocurrency within the ecosystem, either via staking, right? Or also using the Ivory token itself as a means to either stake it and also earn more APY, or also use it as a means to set up an NFT storefront where they can mint for free and also diversify their revenue stream, right? So the whole idea is to create an entire payment solution that is tailored to businesses in emerging economies that are looking to, one, circumvent the difficulty that it takes to be able to acquire customers across borders, but also give them the opportunity to be able to leverage this cryptocurrency as a means to also scale their business moving forward.
And do you have any kind of technology for this already developed, or it's still in plan?
The product is currently being built. Our timeline is to go live in 2 months. That's in August. We've currently had conversations also with a couple of projects that are looking to partner with us in the real estate space, in the entertainment space. We're also currently having conversations with Jumia, which is one of the biggest e-commerce platform on the continent for integrated the payments gateway as well. We also had a call recently with Binance Pay, who is also looking for a potential partnership and how they can create a synergy between their product and ours as well. So that's the stage that we're at from a product standpoint.
Okay. And have you showed your team? Maybe I missed this, or are you like sole entrepreneur?
Done. Apologies, I'm not familiar with non-Google Meet slides. Can you see my screen, please?
Yeah.
Mm-hmm.
Okay, so currently we're a team of about 18 people, 10 of which are focused on product development, and also about 8 of which are focused on product development, and 10 that are focused on operations and marketing as well.
Okay, so you have and all these team members are working now full-time, or it's a part-time work?
Most of the team is working part-time, simply because we've not been we just started fundraising and we've not been able to get enough funds to put everybody full-time. but the core development team are working full time to get the product live in 2 months.
Okay. And for how long are you working for this product? So how long are you developing this already?
We started development in January this year. Mapped out the process and the resources that we needed to pull this off. And yeah, the MVP is actually almost ready. Should be ready in July. So the reason why we're delaying till August is because we still want to do some testing and some partner integrations that we've already signed the MOU with, so that once it goes live, they're also coming on board as well. Immediately we go live.
Yeah, thank you very much. So yeah, I ask all questions, and let's see chat. So chat, maybe we chat later.
Okay, no problems.
Thank you so much. Thank you, Stan. So Ivan, Nathan, do you have any questions or not for now?
No questions from me.
Okay, thank you. I guess Nathan is the same, otherwise he would unmute. So Alvaro, thank you so much for the presentation. Our team will follow up with you so you can continue the conversations in private. Thanks a lot.
Thank you.
Thank you. So moving on to our next startup is YourJustice from UAE, and it's CBDO Andrei Voronkov. So Andrei, the floor is yours. We don't hear you if you're saying something.
Sorry. Can you hear me now?
Yes, we can hear you.
Okay, great. I will try to be on time, but if you will see that time is running out, just let me know. So,
perfect. Yeah, I will make sure to do it.
Thank you. So, YourJustice provides a decentralized reputation layer for Web3, and there are some services now which actually do reputation management on Web2, like Trustpilot, Airbnb, and so on. And YourJustice goes a little bit more far. I will show general scheme, and then we'll show simple schemes and more complex scheme again. So what we are doing, we are creating private jurisdictions on chain, which have their own rules, laws, and bylaws. So like in Ethereum.
Andrei, I'm so sorry to interrupt you, but I don't know if it's just me, but I can't hear anything. Can you guys understand?
Can you hear me now?
Not really good. It's like the voice is washed.
Yeah.
I don't know, something is my microphone. I can try to talk a little bit closer to microphone. Is this okay?
Maybe connect in parallel with your phone or something?
I can try to bring my phone, but it will take some time. So it's really problem for hearing the voice? Can you hear me now? Is it better?
Like this, yes.
Like this one? Okay, I will try to do like this. Like in Ethereum, everyone can create a smart contract and their own private currency. In YourJustice, everyone can create a private jurisdiction. So it's already live now. So we have MVP, and anyone can join and create a profile. Then anyone can create a jurisdiction or join a jurisdiction. It can be any jurisdiction. It can be fork of the existing jurisdiction, like forking United Kingdom laws or United States laws, or you can form laws and rules for your own community. Then you can submit the cases for community members to impact their reputation, like positive or negative impact of the reputation. And then any community member, but it can be not only member, it can be anything like smart contract, some service, some anything can get a positive or a negative reputation. So how it works? For example, there is like anti-scam jurisdiction, and there is investor and founder who have disagreement about their relations, and they go to the court and they then submit a case for litigation. For example, investor submits case against founder, and there are judges in each jurisdiction, and jurisdiction itself defines how judges are working, by which rules, how they're selected, and so on. There's judges can be validated by members of the DAO, which manages jurisdiction, so they can evaluate if this is a judge is following the rules, if its decision is constitutional or not. And then case is either validated or denied, and one party gets positive reputation and another, which is loses, gets negative reputation, or it can be different outcomes. It can be one party who wants to feel a positive reputation for himself or herself, and then this party gets the positive reputation validated by the judge. So it's possible to evaluate not only Web3, not only Web3 wallets, but also different external services. So you can find someone in Web2 and file a case against this person or in support of this person's reputation. And this also can be integrated with Web3 wallets, so that anyone who sending money to this wallet can see the negative or positive reputation of this wallet in some of the selected jurisdictions. And these jurisdictions can have certain parameters like number of connected wallets, file cases, profiles. So each jurisdiction can have a reputation itself. It can be any jurisdiction, can be democratic jurisdiction, can be even monarch, it doesn't matter. You can select how you create jurisdictions, and other can select how to join jurisdictions, and these jurisdictions compete with each other for the clients. Let me show some monetization of the tokenomics. Each jurisdiction can monetize its services like cases escalation, staking on judges, staking on different parties, and so on. So jurisdictions are interested to attract more users, and the better jurisdiction performs itself, the more users it attracts. So it's very important that many private competing jurisdictions compete with each other for the users. And
Andrew, sorry to interrupt. Yeah, just the last phrases, please.
Okay. So it's basically it. We are now on an MVP stage. Also, you can take a look on our team. It's quite international. We have different experiences in marketing and crypto. And also here are some slides about our tokenomics for community, for investors, for lockups, for token sale rounds, for proceed spending. So please ask the questions.
Thank you so much. Yeah, great presentation. We will work on timing. Stan, Ivan, I see you unmuted. Please go ahead.
I think I know what Stan's question is going to be. So Stan, do you want to ask it? About the token utility? Okay. I mean, my question is about token utility. Could you tell us a little bit about it?
Yeah. So on top of this,
able to ask.
So, on top of standard governance, of course. So since basic parameters of the system are governed by the token holders, tokenomics allows to participate in staking. For example, you can stake on judge. So judges are getting paid. People who apply for the cases, they pay it to the jurisdiction, and jurisdiction pays to the judges. But it's possible also to stake on judges, and depending on case outcome and how much judge earns and so on, it's possible to pay for escalation of the cases, different premium features, jurisdiction staking, some open data processing, and so on. So all the process of this platform work is tokenized, and you need tokens for usage of this different features of different jurisdictions.
Okay, and I have two follow-on questions. First one is, how are the judges selected?
Yes.
Let's start with that.
Mm-hmm. That's a very good question. And in principle, we are providing some basic jurisdictions, like, for example, anti-scam jurisdiction. But and in these basic jurisdictions, we have certain process for selection of the judges. So judges are selected by reputable members of community. The judges should pass exams on knowledge of the laws of the jurisdictions. Judges perform their activity anonymously and randomly. But this is like standard, which we are suggesting, but not enforcing. So it can be any selection of the process, and it is decided by the jurisdiction, and can be anything. It's even possible that we will get some corrupted jurisdictions, but those jurisdictions that just will have much less reputation and much less members. So it's up to jurisdiction how to select the judges, and their monetization and their usage by their customers will depend on this.
Understood. Understood. Okay, and the last one is a little bit more of, let's say, a philosophical question, because whenever you talk about reputation or anything like this in the digital space, my main question is like, okay, this concept will only really work when we have some sort of unified digital identity, right? So sure, within your profile, within a certain wallet, you will have some sort of rating, but do you have any plan or any solution on how to actually attach it to a physical person?
Yes, so in principle, this is a peer-to-peer system, but we also can involve different partners. So right now we attach it to wallets, but there is a procedure called merging, and we can merge wallets to some known identity. For example, two people have a litigation case, and if this investor files case against this person, he provides like KYC doxing data about this person. And then arbiters, among other things, also validate the personality of the participants. And then this personality is attached to a wallet, and here like this. And then if other cases, these other wallets are filed against the same personality, then this wallet addresses are merged. And we, in principle, want to go cross-chain in order to be able to merge different wallets from different chains, and also to interact with partners like Chain Analysis, Crystal Blockchain, and other big data analysis companies for blockchain.
Understood. Okay, thank you very much.
Thank you for your question.
Thank you, Ivan. Thank you, Andre. Nathan, Stan, do you have any questions? All right, I guess not for now. Yeah, so Andrew, thank you so much for the presentation. Great job. Our analysts will follow up privately so you can continue the discussions.
Okay, great. Thank you very much. Thank you.
Perfect. Thank you so much. So moving on, last but not least for today. So I wanted to give a word to the co-founder of CR Square Guardian from India, Yashasvi Sarmavliuri.
Yeah, thank you. Thank you so much. Just tell me if my presentation is completely visible. Once. Yeah, I think Andre has to close his screen sharing for me to activate it. Yeah. Thank you. I'm sorry. So my presentation is on full screen, right?
It's not on full screen. We can see it in Canva.
Okay, 1 second. Is it right now?
Yes, right now. Yeah, full screen. Perfect.
Thank you so much. Thank you for the introduction. And so I'm Yashasvi. I'm a CPA from India. I've been in consulting business for last 10 years, and also as a private and pre-sale investor, running a small hedge fund in the crypto space for the last 4 years. So the idea is that for our vision was actually to lead financial transparency to the Web3 community. We know that blockchain itself is actually a transparent ecosystem, but blockchain actually shows only transactional transparency. It doesn't show as to what the transaction has been incurred for until someone actually keys the purpose of the transaction. I understand that all the transactions don't need purpose-based recognition, but there are certain relationships where a transaction needs to be financially transparent for those people involved in this one. So in case of large MNCs, there is ZK rollups, and also there is involvement of permission-based blockchains. But in case of the founders and investors ecosystem in the Web3 space, which involves lots of VCs, investment DAOs, investment clubs, angel investors, accredited investors who are actually investing heavily in the Web3 space, there is actually a lack of financial transparency, because the main problem was is because of the absence of regulation, meaning that Web3 startups actually most of the Web3 startups have two-tier model where they issue tokens from an offshore entity, whereas the expenses are incurred by an onshore entity where they actually operate from. Because of this reason, most of the transactions may not happen on-chain, but also incur off-chain transactions like payments through bank accounts or this one. 50% of the transactions for a Web3 startup happen off-chain. So in this scenario, the investors, most of the investment DAOs or the medium tier 2 or tier 3 investors have no kind of reporting mechanism or regulation for the founders to report to the investors. There is no tool or mechanism where they can actually oversight or see whether the money they have invested has been properly spent or not. And most of this right now is done through SAFT model. SAFT is simply agreement for future tokens. But SAFT actually is practically unenforceable, and SAFT doesn't provide any kind of founder's performance guarantee. SAFT is a simple token which says that I'm selling you tokens and you will get these tokens in a future space. And there are lots of tools which have been right now in the market, which actually ensures the tokens are vested and released in a proper manner. But what about the money which was raised close to 3.5 million or 2 million on average by every Web3 startup in their early stage VC investments? And how is this being utilized to actually achieve the milestones, and whether this is being utilizing properly or not? It is in this regard we want to bring our solution CR² Guardian, which enables a staged finance escrow model, which replaces the SAFT mechanism, which involves performance-based reporting, including financial reporting and also milestone achievement reporting, on-chain KYC of validators, and all this data which the founders are keying in has to be, because our understanding is that the tier 2 and tier 3 VCs or the investment clubs and investment DAOs will not have the necessary teams and analysts to actually process the data and verify the data. So on our chain, we onboard independent subject matter experts from the field of audit, finance, investment analysis, mergers and acquisitions as validators, whom we call guardians. See, that's the reason why we came up with the name CR² Guardian. And these people, on a majority consensus, will verify the data uploaded by the founders on a quarterly basis. And based on this requirement, the money will be released to the founders on a proposal model every quarter during the life cycle of the project. For example, if a project has a life cycle, the funds are being raised for a budget of, let's say, 3 years, that will be divided into 12 quarters, and the money will be released to the founders on every 12 quarters based on a proposal raised by the founders every quarter. And this data will be verified by our subject matter experts, whom we onboard on CR² platform. Initially, these people are being onboarded by an application program which we have run. We have currently onboarded 25 people for our testnet. And in later stages, investors and VCs who are actually partnering with us can actually delegate or appoint their team members, or in fact, actually delegate to performance-based validators, or maybe our CR² DAO members will actually appoint or remove these validators from the ecosystem. So what do we feature on CR² Guardian is basically a staged financing through escrow pools, independent validator approval system, the budget inputted versus actual tracking, which makes it completely immune to rug pulls and exit scams, and planned versus roadmap implementation tracking, including a project scoring system for grants programs, and completely replacing the SAFT mechanism. Our Guardian feature flow is, as I told you, is the explanation. what is a go-to-market? Initially, our go-to-market is the investment DAOs, investment clubs, decentralized VC firms, micro VC firms, whom we think actually need this kind of resource or automated tool system to actually make sure their investments are safeguarded. Currently, there are more than 1,000 plus of these tier 2 and tier 3 VCs in the Web3 space who manage more than $500 million on an estimated average and actually do investments in average of 5 to 10 projects every year. So this is our go-to-market.
Yeah, just the last phrases, please. Thank you.
Okay. So we have competitors. Our major this thing is about the financial and performance reporting. That's our differentiator. We are launching our testnet, closed test, open testnet in maximum of by the end of the month. It's in testing phase right now, and our team is we have currently raised close to 600K. We are raising a total of 4.8 million in pre-seed round. Our team consists of majorly CPAs and also IIT alumnus, Indian Institute of Technologies from India, who worked with previously with all the big 4 firms or the major technology firms. And these are the current investors who have invested in our project right now. And we are also in talks with multiple investors, strategic investors, VCs, who can actually be part of our program and utilize our platform for their future investments. That's it. Thank you. Sorry if I've overridden the time.
No worries. Thanks a lot. So questions, please, from investors.
Sure, then I will just go ahead and I will ask that. Okay, start, go ahead.
No, I have as a kid, so just go on.
Okay, all right. So would be interesting to know if we as potential investors in CR Square would directly be using an MVP or some kind of version of CR Square while we invest to see directly that you track the funds. Not sure if I asked that in the right way, but maybe you understand.
Are you saying that whether the CR Square our platform itself, we are raising funds through our own platform?
No. The question would be if we as investors could already be basically be the first test case of CR Square by using CR Square. Yeah. Okay.
Yes, we are welcoming that. So in fact, we are launching our own fundraising program using our own platform. So as an investors, you can actually invest in our project using our CR testnet, this one, and give a better feedback to improve this structure and feedback, because this is a tool which is needed for the current community because of absence of regulation and borderless investments which are happening across the world, which can improve the performance of founders and credibility of founders, and also safeguard investors' funds.
Exactly, but then right now it's still a test net, and if you raised all the funds, then it's currently not trackable.
These were actually the pre-seed funds which were given to us before we even started developing the product. So yes, and the future funds right now, which we are in talks with the VCs, are going to be raised through CR Square platform, our own platform.
Okay, that's interesting. Okay, thanks.
Thank you, Nathan, for the question.
I have one question. I have several questions, but I can now ask only one. So the platform is rather for VCs, right, and funds instead of retailers, because it reminds me also on the IDO platforms or IDO launchpads, but with extended mechanics. And indeed, at Scaleswap, we are going to build also something similar like this.
So
escrow-based.
We don't want to become a crowdfunding platform. This platform is exclusively for the VCs, investment DAOs, investment clubs, or pool of investors who actually invest in pre-sales, not in the public rounds. So we want to become a tool for all the IDO launchpads also. For example, we are in talks with different launchpads who are going to say that if you want to do an IDO on our platform, why don't you go register yourself on CR Square Finance, update all your budget data, update all your KYC data and everything. And then we will also fund you. Once the funds raised through the IDO will be funded to CR Square. So we'll become a tool even for the launch pads to utilize our platform. So we don't want to become a crowdfunding platform because there is a lot of competition and you need to have a huge community to actually raise those funds. But we want to become a tool for all the investors.
Got it. Makes totally sense. I mean, on the technical side, I don't see a lot of issues here because it's not a rocket science to build such a platform. It's more about functionality and customer development, getting feedback from also investors, and makes sense. The product. Let's chat after.
Definitely, sure. Thank you so much.
Thank you.
I have a more of a, let's say, comment. The problem that you highlighted is the visibility that the investors have on startups, right? I come from a traditional venture industry, and I want to ask you this question. Why do you think startups fundraise usually on the 18 months to 2 year basis and not every 6 months or every quarter?
So yes, we are actually see, I come from a Web2 space, right? I mean, I'm a CPA myself. So I worked with as a virtual CFO who actually helps startups to do MIS reporting and structuring for when there is an involvement with larger VCs, tier 1 VCs, or there is an involvement of the big four like Deloitte, EY, KPMG. So they are the oversight users for these investors. So maybe the teams don't have the capacity to do so. In the Web2 space, basically, there is a reporting mechanism, and also there is a jurisdictional, security, meaning the companies which raise funds have to report to the Ministry of Corporate Affairs in respect to countries what audit and all the structures. In the Web2 space, in the Web3 space, it's more about. That's the reason why in Web2 space, basically, even though the funds are allotted, may not be released immediately or may be held or released based to reporting. It depends on scenario to scenario. If you are a tier 1 VC or if your project is already in growth stage, you may actually release the funds outright. But if you are an early stage fund, the funds may be released in short manners. But in Web3, basically, you're selling tokens. You're not raising funds. It's actually you're selling tokens. So you need to sell your tokens to the extent possible and raise the funds immediately as soon as for all the requirement immediately right now. So that's how you ensure that your project, because at a later stage, the token price falls down, you won't get any investors in future if there is a reduction in the token price, right? So your results are immediately visible in the Web3 space, but in Web2 space, there is a valuations game involved, and the shares are actually not publicly traded for the startups. So the results are not immediately visible. So that's the reason why in Web3 space that there is a need to pay for projects to raise the funds immediately, so that in case of any immediate failure will actually show immediately once you launch the token into market.
Okay, I mean, but one of the, let's say, the big value proposition that I heard from you in the beginning was that the money is released as every quarter, let's say, based on the proposed budget, if I understood that correctly.
Yes.
I mean, generally, the reason why you don't do that is because you want the entrepreneurs to actually focus on building the product, not on creating presentations for you, right? So, I mean, I don't personally buy into that idea, but I really have to say that the tools that you're building, I think, are very good and very interesting. I just think perhaps your thesis, or at least a part of it that I, for some reason, chose to focus on, doesn't quite fit, but I think we should speak anyway.
So our idea is that the money will come in and will stay in the escrow, which will be in custodian wallet supported by a Fireblocks or other service provider. So the founder is guaranteed of the money being received. So the investors are actually depositing the money and it's staying in escrow. The founder has to ensure they are reporting the transactions because they are scaling up. And because they're raising money for scaling up, they definitely will have a team member or one of the team members who can update the expense data on a daily basis or a weekly basis, or a bulk upload data available. So that way performance is being reported. So they don't need to worry that the money is not come. The money is lying in the escrow. It will be released subject to your performance reporting.
Yeah, understood. No, I understand. I understand what you're talking about. It's just, I mean, in this particular case, I think just because you're able to do this in blockchain, it doesn't necessarily mean that VCs need it or should be using such tools. Because I think in the end of the day, all it does is takes away from the core activity that you should be focusing on, that is building the product, and diminishes the meaning of trust in these transactions, which in the end it should be the key thing, right?
Right.
Anyway,
but yeah, this is available in the tier 1 VC space, where the funds are being raised by credible founders and the tier 1 VCs. But all the tier 2 and tier 3 VCs who are actually investing the small amounts of 50K or 25K or 30K, they are the ones actually losing the money or have no kind of understanding as to how the project is progressing and how the money is spent. So this is primarily focused on these people who need that kind of business. But as a tier 1 VC or as a lead investor, you obviously have the trust established with the founder.
Yeah, that's do your own due diligence case, you know, that's, but that, yeah, but I know what you mean. I understand what you mean now.
All right.
Thank you.
Yeah, thank you so much for a great discussion. Yes, Asvi, thank you for the presentation. I guess you can continue in private. So that was great. And I think, yeah, just maybe a couple of words from my side as we're done with pitches. I mean, first of all, huge thanks to Mark Nasser. He's our senior investment analyst who actually pre-selected and talked to every startup prior to the session. So Mark, huge thanks to you for organizing this.
Thanks to you, Kate. Thanks to you for moderating the session.
Amazing. So also a quick reminder to all the startups, guys, please make sure to upload as many details as you can to your InnMind profile, and also upload the latest pitch deck in your profile to make sure that these investors here that are present on the session and other investors can actually access the most relevant information. And if I can just steal 10 more minutes, maybe less, from our VCs, I just wanted to, you know, quickly ask, because usually we're doing at the end and we have just a little bit more time. If you can give like short pieces of advice to our community of startups, and I would say maybe answer this, let's say, hypey question that everybody's thinking on right now on how to survive on the bear market. So if you can just elaborate quickly on this, everybody, that would be amazing. So Ivan, do you want to start?
Sure. So I mean, that's a big question. So first of all, I mean, I'll start from the end, because that's how I remember the questions. But how to survive in the bear market. I think this time around, we're kind of in a lucky position because many of the people in the industry have already seen this and seen what comes after the bear market. So although everybody has slowed down, I have a feeling, and nobody stopped. So I think that's very good for startups raising money. The other thing is, I mean, it's time that the industry becomes a little bit more capital efficient, let's say, because I think if you compare Web2 community to Web3 community, you start seeing a drastic difference in how much things cost. So I think that should level down a little bit as well. That's for the founders, mostly the comment, I guess. Then, sorry, can you repeat the other questions? Because there was a lot.
Yeah, the second question is, any pieces of advice to startups on their pitches or how they can improve the presentations?
Okay, no, I think the pitches today were quite good. Everything was very clear. I think the key comment is that, I mean, if you need to have a very clear problem and solution slide. That's always very helpful in the beginning, because then you will take a lot of one of the pitches, for example, had, as it often happens in startups, you have many things piled together, and sometimes it's hard to figure out what is the main focus of what you're trying to do.
Yeah, fully agree. Thanks a lot for this. Stan, do you want to add from your side?
Yeah. I have strange not really good conditions, but the main thing is it's also a good sign that the market goes down, because it undergoes a clearance, a very needed clearance. We have too many projects which are not really delivering, not really performing, which have been created during the 2021. So the main advice would be to focus on the developing, on the performing, and on the delivering the product. This is my main advice. I have much more, but I need to go on mute now.
Thank you so much, Stan. Yeah, we all understand. Thanks. Nathan, do you want to comment here from your side?
Sure, yeah. So I'm probably not a VC that's very long in the space, here like maybe since a year or so, but the advice would be that it's important to have right now a solid product that is actually useful, which doesn't really rely on the hype, so to say. And then regarding the decks and presentations, there's like the bigger funds sometimes don't even go deeper into talks if the presentation isn't that good, simply because they're just so overloaded with a lot of decks still, even though the market isn't as good. So it would be good if the presentation is, think of it this way, that if you were an investor and you would know nothing about your product, then would you directly understand the product and would you directly understand the proposition of it? So then I really like MetaVoice, but at the beginning, if I didn't hear what it was about, I wouldn't have really understood what exactly it is. And maybe I would have not made the jump to a call. So maybe that's a piece of advice that would be useful.
Yeah, thank you so much. Yeah, makes complete sense. And yeah, on behalf of, let's say, InnMind Capital, I can say that on InnMind, there is no bear market. We're always looking for great startups and great opportunities, and our network of VCs is always hungry for great deals. So this is your place to be. And yeah, I mean, just elaborating quickly on the VC Web3 market trends, InnMind has recently released an amazing report, which is available to download in our blog, where our VCs participated and we surveyed them and actually retrieved a lot of very good insights on the deal closure details, how they forecast the market performance in the nearest future. So if anybody is interested, it's free to download, so feel free to take a look. And I think we're done for today. So thanks so much for everybody who joined, investors, startups, everybody did a great job. So looking forward to the next session. Thank you.
Thank you so much.
Thank you too.
It was a pleasure.
Thank you, everyone. It was a great session.
Bye-bye.
Thank you so much.
Thank you.
Thank you.